Yo, what's going on, guys? Welcome back to the channel. Welcome back to another video. In today's video, I want to go ahead and break down my long-term portfolio, share with you guys some of the positions that I have, share with you guys the performance that I've had up until now, and show you the strategy that I'm using to continuously invest in that portfolio. I started this long-term portfolio back in April, so of course anyone that bought stocks during that time is likely up on their position, so I'm not here claiming to be some type of stock market guru, but I wanted to show you what I've been doing, how I've been continuously adding to this portfolio, and how well it's grown since April. If you come to my channel, you know that I preach the importance of starting a long-term portfolio, setting yourself up for the future, because at the end of the day, you don't want to trade for the rest of your life. You want to build a portfolio that you can eventually live off of in your older years. So before we get into this one, make sure to smash that like button for the YouTube algorithm. It'll really help out the video. It'll help out my channel continuously grow in 2021. Subscribe if you want to stay tuned for some future videos, and press the bell notification so you know every single time that I post. So guys, when I talk about my long-term portfolio, I'm referring to three different accounts that I currently have. The first one is an individual brokerage account that I invest $1,000 a week into every single week, and continuously dollar cost average into stocks that I like, that I can pick, and I can continue to contribute to. Now, the reason I went with an individual brokerage account is because I wanted to invest more than $6,000 per year, which is the limit if you're under 50 years old on a Roth IRA. I did have a Roth IRA and traditional IRA that my previous employer was contributing to, which I just recently moved into E-Trade, so I'll go ahead and share that with you today as well. Now, being I am currently self-employed, I went ahead and started a Sep Ira, which is great for self-employed individuals. It's a way to reduce the taxable income that you may have at the end of the year. So let's go ahead, jump onto the computer. I'll pull up the E-Trade accounts where I'm holding all of these investments, and hopefully after today's video, I can influence just one person to focus on their long-term portfolio, focus on those long-term investments, because there is simply nothing more important than time when it comes to the stock market. All right, so first up is the individual brokerage account that I have. Current account value is $45,748.80. My total unrealized gain since I've started this portfolio, which was back in April, is $8,175. And the day unrealized gain is $2. So right now I'm just about flat on the day. There's winners and losers every day, but that's the most important thing about diversification. When some stocks are going down, some of the stocks in my portfolio are going up. I have a good healthy mix of tech, industrials, some value stocks, some dividend stocks. So overall, a very balanced portfolio. And I'll talk a little bit more into the strategy that I'm using to make sure that this portfolio stays even and stays diversified. So first thing, obviously, let's just go ahead and filter this by total gain, top to bottom. First one, as you guys probably already have guessed, is Tesla. Now, I don't even have that many shares of Tesla. I own 3 shares of Tesla. My average price paid was $414. Now, I got into Tesla around the time that the stock split happened. I knew that this would be a good opportunity to get long some Tesla shares, and my current price is about $414. I can go down to this. You guys can see that I've been adding to this over time, $9.24, $9.24, and $11.16, which makes an average of $414 a share, up about 106%. So pretty awesome to see. About a $1,300 gain there on Tesla. Total amount in that stock is about $2,500. That's the amount of value that's in that position. The next one is Penn National. Now, if you've been around this channel, you know that I love the opportunity of sports betting into the future, and I've put my money where my mouth is and bought Penn back at 53. Right now, trading at around 104, up about 94%, so really awesome gains. I love the potential of Penn into the future. You guys can see that I've been adding to this over time. I've had about 6 ads. I've been buying it as it goes up. My first ad was actually $27, so that's awesome. A really good entry there, up 276% from that original entry. But I've been continuously adding to this. Now, this is called dollar cost averaging. Dollar cost averaging, usually is when the stock's falling, you can average down, make your average position price lower. But I'm also doing that on the upside as well. I want to get more money into the performers, and that's why I've had to average up a little bit on Penn. But if I just held these original stocks at $27.70, I would only be up $536. Now in this case, I'm up $963 because I wasn't afraid to continuously add to a winner. Some people out there may not want to add to their winning stocks because they're moving their average price up, and that may scare you off, but that may also make you miss out on some gains. This is a great example. If I didn't add to Penn, I'd be up 563, but since I've been continuously adding, I'm up 963. So really nice to see a really nice performer there on Penn. Snapchat, another one that I continuously add to. I have about 32 shares, up about 109%, $896 total. Today looks like it's taken a little bit of a hit, but that stuff doesn't scare me. I'll continuously add to Snapchat. This is for the long term. This is for 20, 30 years down the road. So I'm not really worried about the intraday moves that you may see on these stocks. Apple, a really nice tech stock. You guys, I don't really need to explain why I'm investing in Apple. Have about 29 shares. Bought this before the split, so these are split shares, 29 shares. You guys can see that I've been adding quite a bit to Apple, and I am getting those dividends as well, and that's why you see these fractional shares. Every time you see this fractional amount, that is a dividend. So next one is AbbVie. Now AbbVie, I would 100% recommend. Obviously, I can't recommend stocks to you guys. Don't take any of this as investment advice, but AbbVie is a tremendous dividend stock, and it continues to move higher. A lot of dividend stocks that you see out there maybe just flatline or continuously move lower. Even though you're getting your dividend, you are losing some money on your position, but AbbVie continues to go up. Today, it's up 2.4%. I purchased these back at 86. They're now trading at 112. And I'm getting an incredible dividend from it. So that is a great stock if you're looking to start a dividend long-term portfolio. Next one here is Peloton. Now, when I saw Peloton, I was calling this out when it moved down to $100 a share. I thought that would be a great opportunity to buy into this stock. I got into it. My average price is 107. I did get my first buy at 101 and my second buy at 124. Now the stock's trading at 166, so I'm up about 53% on that position. Really nice to see. I do have a little bit of worries about Peloton as, maybe the virus starts to cool down, people get back into gyms, but it's still performing, and I really am enjoying owning the shares of Peloton. Home Depot, Wynn Resorts, Microsoft, Shopify, some really nice winners here. I do love Shopify. I got in around $1,000 a share, so I am pretty happy with the average price that I have. I got in one at $9.77 and the next at $10.77, up about 16% on that position. And, it is one of my larger holdings, so about $2,400 in value into that position. DraftKings, another one for the sports betting industry, up about 37%. I have AMD, I have Walmart, I have Palantir. Palantir is a little bit more controversial. I really like the stock long term. I got in at a really good price. I'll go to my ads here. My first ad on Palantir was $15, $17, $25, $24, and $25 again. I've continuously added to this. If Palantir drops even lower, I'll dollar cost average, try to move my position down a little bit. But overall, I am happy with my position here on Palantir, and I do like it long term. McDonald's, safe stock. Royal Caribbean, playing that, that comeback stock, that comeback for the cruise line industry. Nice 24% gain. My first purchase on Royal Caribbean was back in May 7th at $38. Now it's trading at $72. That position that I first bought is up 90%. So a really nice comeback stock. I have added to it. I added some at 80, so I am down on those two ads. But overall, happy with the performance and happy with that slow comeback that we're seeing. Delta Airlines is another comeback stock, up 26%. Starbucks, Cat, Disney. Disney, love Disney right now, up 43% on that. Bought that not even too long ago at 122. You guys have seen the incredible move that Disney has made. I bought these back on November 2nd, so a little bit more than 2 months ago, and I'm already up 43% on Disney. That's really awesome. Love the stock long term. I really like what Disney's doing with their Disney Plus, so I do see some potential there into the future. Scrolling down, we do have a lot of stocks in here, and that's just me being diversified. We have some tech stocks, we have some high dividend stocks, we have some industrials, we have some more controversial stocks like Palantir, also like UAVS over here. Right here, UAVS is a small penny stock that has to do with the drone industry, and I am also bullish on drones long term. This one may not work out. I only have 15 shares at an average $113 value, so a very small percent of the portfolio, but I like to mix in some of those high potential stocks and just go light on them and see what can happen if I start to invest in them early on. So my average price there is $7.46. Stocks like Coca-Cola right here is another great dividend stock. I've continuously added to Coca-Cola. Right here you can see that I have added many times, and this is me dollar cost averaging into Coca-Cola as it continues to move higher. It's a great dividend. I'm up about 3% on the stock overall, so not a huge gain, but I have been getting those dividends. So here's a dividend, here's another dividend, and here is one more. So the dividends come in, the stock slightly is up, so I am, overall profitable on that position. Now looking down at the bottom, some of the ones that I am down on: Roku, Verizon, CRM, and Snow. These ones I am slightly down on, but I am happy to continuously invest into these. They are small positions in my portfolio, and I would like to move my average cost down. So Snow is a great example. I'm down 12% on Snow. My purchase price was $356. My next purchase price was $305. So I moved that average cost down to $339. And, coming up Monday when the next $1,000 comes into the portfolio, I would love to buy Snow again, move that average cost down a little bit more. So hopefully longer term into the future, I can become green on this position. So overall, guys, here are the stocks that I own. It's a good mix of tech, good mix of growth, good mix of high dividends. And so far, the performance has been great. If I scroll up to the top, up about $8,000 since early April. I've bought some stocks all the way until today. And so far, it's been working out as we've seen the market continuously rise higher. If I go over to the estimated income, we can see what dividends I expect to make for the year. So right now, over the next year, I anticipate to make about $633 in dividends. That's free money. That's, nothing I have to do for that. Fully passive. Very nice to see that. Hopefully, as this account grows, as I can get this into the six figures, hopefully when I'm older, a seven-figure portfolio, those estimated incomes from the dividends can be something that you can live off of, or it can be a substantial income source later on in your life. So the next portfolio we're going to break down is my Sep Ira. This is my self-employed IRA, about $9,000 in there. I have about $178 unrealized gain, 2%. Today up $50, so a nice return. Since 2021, I've contributed $2,000, putting $1,000 per week into this portfolio, and I'm going to continue to invest in these stocks that I have. Now, my plan with this portfolio is a little bit different than my individual brokerage account. You guys saw in my individual brokerage account that I have a lot of individual stocks. I'm picking stocks. I'm, sort of diversifying that portfolio. With my Sep IRA, I just really want to track the market. I don't want to pick more stocks. I don't feel like doing, that much work. I just want this to be a little bit more passive. So you can see my investments are in SPY, the S&P 500 ETF. I'm in the QQQ, which is the NASDAQ ETF, Apple, which I love Apple, and that's why I did pick Apple in this one. That's my one, my one just individual stock right there. VYM is a high yield dividend stock, so hopefully I get some high yield dividends from this stock right here, this ETF, I'm sorry. IAU is gold. BND is a bond market, so obviously I want to have some exposure to bonds in this portfolio. If the stock market falls, the bonds should get bid up, so I want to have some bonds in there as well. And then the VNQ is a real estate ETF. So it's a REIT, it's a real estate ETF, and hopefully, right now I'm down on it, but I want to have that diversification. It is a sort of a, small percent of this portfolio. I am very heavy in the SPY, in the QQQ. I'm doing that because I want to track the market and I want to have some hedges against it. So a hedge with gold, I have a hedge with bonds, I have a hedge with the real estate ETF. So I am sort of diversified here, but overall, this portfolio should really just track the market. It shouldn't overachieve the market. It shouldn't, beat the market. It should just do what the market does. So if we continue to have good markets, into the future, 20, 30 years from now, I'm going to assume that the market is higher than it is today. This portfolio should do well, with the market. So these are my, my positions in my Sep IRA: SPY, QQQ, Apple, VYM, IAU, BND, and the VNQ. These are all ETFs. Apple is not, and here are two more ETFs. So lastly, let's go over to my final account, which is my Roth IRA. Now, this money was a direct transfer over from my previous employer. There was about $2,700 in there, and I had to go ahead, move that money out, and reinvest it myself. So far, I've bought the QQQ, the SPY, and the ARK ETF. This is the ARK Innovation ETF. I really like what ARK's doing. I'm up 26% on this ETF, which is absolutely insane. I just bought it. I believe this was back, the 2nd of December as well. Up 26% in just about a month. So really awesome to see the performance on that ETF. There are slightly higher fees for this ETF, but when you look at the 26% gain, it really outweighs it. So not really much stock picking in this Roth IRA either. Tracking the market with the SPY, tracking the market with the QQQ, and hopefully getting those higher gains there with the ARK Innovation ETF. So guys, there are the 3 portfolios that I'm currently holding in E-Trade. You can see I'm using a few different strategies within those portfolios. The first one, the larger account, I'm picking stocks. I'm diversifying these stocks myself, picking some high growth stocks, some tech heavy stocks, as well as some high yield dividend stocks. So you can see that I have a lot of stocks in there, trying to diversify it and equal weighting them so that I'm not too overweight in a particular sector or a particular stock. With the Sep Ira and the Roth IRA, you guys can see that is a little bit different of a strategy, just trying to track the market, take advantage with those market ETFs like the SPY, like the QQQ, and hedging a little bit with bonds, with gold, with real estate, not really picking individual stocks. As of right now, I'm very pleased with the performance. The overall value is just around $56,000. It is slightly high, in my terms for the amount of money that I have exposed in the market. So if we do come into a potential drop, it will take a little bit of a hit, but I'm not going to get scared away. I'm putting money into these accounts. I have cash ready to continuously invest in dollar cost average if I have to. The goal here is long term. I'm not worried about these intraday moves. In 20 years, in 30 years, my bet is that the stock market will be higher than it is today. And if it is, these accounts will continue to grow. I hope you guys enjoyed looking at my portfolio, seeing what stocks that I've picked. I hope it really helps you guys out as well. If it did, make sure to smash that like button. If you want to see some more videos on the channel, subscribe and press that bell notification so you know every single time that I post. I hope you guys have a great rest of your week, and I hope to see you in the video on Friday. Peace.